A theme on this program is we in America, I think, have now achieved energy dominance. Yeah. I think that's a big deal. What say you?
It's a huge story. It's the most untold story in the economy right now. Really? It has, of course, geopolitical implications, but from an investor standpoint, everyone is looking for value. Where's the value story? We have high risk assets. There is incredible value in this energy story, and it's not a short-term play.
How do I invest for it? If we are dominant, how do I invest to take account of it?
To me, the most important thing is to find those energy-oriented investments that are not commodity price dependent. There's no reason to get levered up to the price of oil, which is somewhat volatile. It's going to move around and has a lot of supply relevance from OPEC. Mm-hmm. The investor story is in infrastructure. For them to build out the capability for us to become a net exporter, and we're not just talking oil, we're talking gas. So this liquefied natural gas story, people talk about it, there's a few companies, but if we actually play out the math of how much we can export to Asia, to Europe, 3, 5, 7 years, this is a massive investment opportunity, but we need more pipeline to do it. They need more volume, and you need those companies that facilitate such.
So invest in natural gas companies, pipeline companies, that's it? That's what you do?
I think that the upstream, that there's still production value, that those companies getting it out of the ground, the margins are so much bigger than they used to be. So yeah, $64 oil is better than 50, but they got to a point they're making money in the Permian Basin at 50.
Yes, they are indeed.
So that, I think, continues to expand.
Okay, so that's looking to the future. Yeah. I want you to help me look at the past, which is General Electric. Yeah. A lot of people on this program said this thing is going away, and it is an icon of American business. Going away?
Well, it's certainly not going away. I think it may be going away from my screen for a long time. It may not be a buyable stock, because the reality is that you would think it would hit a bottom and just become so attractive they overdo a sell.
Exactly. Yeah.
The problem is there's no catalyst. They sold off the assets that would be most catalytic to turnaround. So they've come in this Baker Hughes deal. They're playing an oil gas story. I'm talking about how I'm bullish on that. It's the least attractive, least free cash flow generating. So they're kind of losing competitively even in that business. We know about the aviation side. Yep. But they don't get a multiple there that's going to command a $30 stock anytime soon. And how do I know this? They cut the dividend because they knew their free cash flow was collapsing. So to me, I think it's a long time until management has a chance to blow it all up and rebuild the company.
If you'd have told me just a few short years ago that GE would not be a buy at 16, I would have laughed at you. But that's exactly what you're saying.
That's right.
All right, look at the big tech companies. They've had a fantastic run-up. You think it's run up as far as it's going to go? So don't buy them, in other words?
I would not say that. I would say that on a risk-reward basis, it's a lot less attractive. But the big theme we have with clients right now is they just have to understand, socially and politically, these big tech companies have been so popular, everyone's favorite, unfazed.
Oh, definitely.
That is changing. So what the hipness and coolness of Silicon Valley, right now you have far left turning on them, but you have the right as well. There's antitrust talk, there's privacy, there's the election-related issues with Facebook we know about. So there's a whole lot of issues. I think that the monopolistic side, I don't happen to buy the argument, but what I'm saying is you're going to get PE compression because their social and political dynamic is changing. The precedent I have on this, look at what happened to financials, look what happened to energy in past decades. I think it's big tech's turn to be in that kind of orbit.
Very interesting. Talk to me about Qualcomm, because they've been, I find this extraordinary. Yeah. They've been hit with a fine. I think it's $1.2 billion.
5% of revenue from that year.
Yeah, that's huge. It's the Europeans that are fining Qualcomm because they bought off or did some deal with Apple. So here you've got the Europeans taking money out of American corporation because it did business with another American corporation.
And they're not accusing the company, they're not accusing Apple of doing anything wrong.
No, that's true.
So it's the craziest antitrust interpretation I've ever seen. They're essentially saying Qualcomm cut a deal for Qualcomm that was so good that it made Apple take the deal, and we can't have that. So look, we don't own Qualcomm anymore. They have a lot of other problems. There's drama all over the place. Apple's suing them too, and things like that. My point being that this EU antitrust thing is not the way Americans look at antitrust. I'm all for certain antitrust regulation. This is way overboard.
They just want to take our money. They can't innovate themselves. They just want our money. I know you're not necessarily agree with that, but that's where I'm coming from.
I maybe agree more than you think.
You're right. David, thank you very much for joining us.
Great to be with you.
Much obliged, sir. Thank you. Let's get back to the FBI and those anti-Trump texts